and range from seeking modification of some proposals to reconsideration or review of certain others. Requests have also been received for granting some fresh relief. I express my sincere gratitude to everyone for the interest they have shown in appraising my budget proposals. I appreciate the valuable suggestions they have made and understand the concerns they have expressed. While I propose to address some of these through amendments to the bill, a number of concerns relating to indirect taxes can be addressed through notifications. I shall now take up the significant amendments to the budget proposal. Direct tax. I thank the members of the Standing Committee for examining the Direct Tax Code Bill and making valuable suggestions. Some of the proposals in the DTC, such as removal of cascading effect of the dividend distribution tax, allowing venture capital to invest in all sectors, introduction of advanced pricing agreements, and raising the threshold limit for audit and presumptive taxation to ₹1 crore, which have been endorsed by the Standing Committee, have already been included in the Finance Bill. However, I could not consider all the recommendations of the committee as the report was received on 9th of March after most of the proposals of the Finance Bill 2012 had been finalized. I would like to take the opportunity on the later occasions to look into greater detail from these aspects. In addition, certain provisions relating to general anti-avoidance rules have also been proposed in the Finance Bill 2012. After examining the recommendations of the Standing Committee on GAAR provisions in the DTC Bill 2010, I propose to amend the GAAR provisions as 1. Remove the onus of proof entirely from the taxpayer to the Revenue Department before any action can be initiated under GAAR. 2. Introduce an independent member in the GAAR approving panel to ensure objectivity and transparency. One member of the panel now would be an officer at the level of the Joint Secretary or above from the Ministry of Law. Provide that any taxpayer, resident or non-resident, can approach the authority of advance ruling for a ruling as to whether an arrangement to be undertaken by her is permissible or not under the GAAR provision. To provide greater clarity and certainty in the matters relating to GAAR, a committee has been constituted under the chairmanship of the Director General of Income Tax, International Taxation, to give recommendations for formulating the rules and guidelines for implementation of the GAAR provisions and to suggest safeguards so that these provisions are not applied indiscriminately. The committee has already held several rounds of discussion with various stakeholders, including the foreign institutional investors. Committee will submit its recommendation by 31st May 2012. To provide more time to both taxpayers and tax administration to address all related issues, I propose to defer the applicability of GAAR provisions by 1 year. The GAAR provisions will now apply to income of financial year 2013-14 and subsequent years. Honourable members are aware that a provision in the Finance Bill which seeks to retrospectively clarify the provisions of the Income Tax Act relating to capital gains on sale of assets located in India through indirect transfers abroad has been intensely debated in the country and outside. I would like to confirm that clarificatory amendments do not override the